Thanks once again for joining us. Today we focus on the market crash caused by Japan interest rate changes last week, as well as a look at how ChatGTP trading blends into the new trading world, where you do have the option to get ChatGTP and use it in the process of your trading. This is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time, welcome. If you're a repeat visitor, welcome back. We also want to thank our Patreon supporters. If you enjoy the show, would like better ideas on investing and trading, please join us on Patreon. So what you'll notice is I started today with video of a quarterback almost having his head removed by an aggressive linebacker. The reason I chose to use that piece today is that what happened there, I believe, is consistent with what we saw happen in trading this week, which is what I call an illustration of what's currently called a bot war, or I call it that, and you'll see why as we move forward. I wanted you to note this because I also wanted to make sure that you understood what was happening, why, and how this might look the next time this pops up again. So the first thing I wanted to review is that, as you know, the stock price was first down 1,000, then went down 1,200 finally, and then we started the recovery process. In this case, it was clear that the Japanese shift on interest rates was the big impactor on what occurred there. And so we have a clear understanding of what occurred. The one other part that we haven't received answers on yet is who had their head removed from their shoulders and who actually made money out of that situation is going to be found out over the next few weeks. And I think the whole process will be educational. The next thing I would like to review is, we've talked about it before, but there is a company called Long-Term Capital Management. And I've asked you, if you've watched our channel before, to take time to review that, because it actually is really helpful to generally understanding what just happened. So just a quick review would be, in the case of long-term capital, there was a firm that was put together with several $billion, and that firm included some of a guy named Professor Black, who helped create the Black-Scholes model that is typically used in trading or in trading options right now, but in other elements of finance as well. Professor Black and then his trading team that was brought in from Wall Street got together and put together, in essence, what was a large hedge fund. And then they levered up the money that they were using to trade. This now put them in a really powerful position to trade options and profit from doing so. The problem that they ran into was something called the Russian default. So when the Russian government decided to default on their bonds, it introduced a whole bunch of new data that was not there previously. And what that data resulted in is, all of a sudden, there was a change in the marketplace. And because they had a number of instruments that were all dependent on data from other parts of the market, all of that occurred, and it resulted in what I want to call a huge exposure by long-term capital. And just like in the football game that you just saw, this was an opportunity for entities that knew about who they were and what their positions were to use it as an effort to sort of decapitate them on the way to high profits in the process. And as they were busy decapitating long-term capital, the whole market almost crashed in the process, much like how it felt earlier this week. So I wanted to encourage you to take time to watch one of the videos. Any of the books would be excellent to read about, because we definitely have a similar circumstance happening at least once a year now, but I'm actually expecting it to be even greater in count, because back when long-term capital was doing its thing and got wiped out in 1998, we didn't have the percentage of computers that were trading accounts was a lot lower. So if you layer in the fact that a new piece of data has spooked the markets, combined with how fast the bots now outsell or get rid of instruments in order to get right with the market, I just think that we're in a lot more volatile market where you're going to see activity like we saw last week occur again. And, a few other points that I want to make on this were, A, the way the process works here is that the US population grows about 2% per year. And so when you look at a stock, if you see a stock, let's say McDonald's, that hasn't been doing that great, or a utility, for example, they pay great dividends, but they're not growing very much. Well, what happens is that those entities do not tend to get overvalued. They may dip a little bit during the markets, but most people are trying to buy that dip. What you're going to find more often is that those companies will ride out a relative horror show like this quickly. The companies that are not the case with is the 7 sort of NASDAQ superstars that we know about. I was watching Tesla in particular, ended up the whole mess, sub 200. Obviously, NVIDIA went from, Tesla was up in the 250s, ended up this whole thing in the 195s. NVIDIA was up in the 120s, 130s. It ended up sub 100, but after the final recovery started occurring, it was coming back. So the trend for the fastest growth companies is for people to have to pay up higher than the normal valuations of those companies in order not to get left out, because rarely are they extremely cheap. Now, the other side of this would be, one of the reasons I'm discussing this is that there's actually the possibility to make a huge amount of money either on options or on stocks as we go through these shocks that occur. But again, I believe they're going to occur more often because there are more computers that are guiding the trading activities that are going on. We also discussed that even if there isn't a shock that's created by something like the Japanese in this case, there's also games going on with relatively small traders. There's one trader who tricked the bots into selling a whole bunch, and the market lost $1 trillion off of his tricking the bots and forcing them to sell, because there are some people that understand how these things were constructed, and they leverage that information to generate opportunistic trading. So the final note I wanted to make on all this is that because of how the markets are moving right now, it's my belief we're now in a situation where we're going to see more of these shocks. And you could call earnings from the largest companies like an NVIDIA the equivalent of this shock, because how they move impacts other stocks that are high growth stocks in their sector. And so it's my belief then that we're going to see more of this. As you just saw, the folks at Meta came out with earnings. The stock popped nicely based on higher than expected earnings. Meta's a hard stock to trade, somewhat like NVIDIA, because you can't kind of, like with Tesla, you can count up how many cars sold, and that's going to help shape your process. In the case of Meta, until you see what their earnings were, it's very difficult to anticipate what that number was, and as a result, there are a lot of people that have to pile in after the fact in order to try to capture some of the earnings momentum that's generated by knowing what the number is. So overall, I would say that there is this challenge to the market of the whole idea of, I'm going to say, bot attack trading or a bot war, where there's different entities trying to make money with different strategies. They have their computers pre-programmed to do this, and the most common programming they have is to sell quickly so that you can get back into the market, at a lower price, but you don't lose as much money. And so I think that the world of this unusual, crazy trading will become more normal. And if you're aware of what's happening and why, it can be very profitable. So it's highly recommended you develop a grasp for it. This concludes our discussion of the bot wars. Uh, as you know, Elon did not do his show this week, and therefore Tesla's a little bit on the low side from where it should be, but it is recovering along with other stocks. And it takes time for people to sort of retrust the market after going through something like this. So I think we'll be back to normal in another 3 or 4 weeks, unless we see some sort of crazy earning stuff that does the opposite. We now move on to our health tips. This is just a reminder. On our list, I reviewed it, and one of our docs at the NIH had suggested never going out with at least a 30 SPF, regardless of skin tone. Also wanted to encourage you, just to remind you, the pre-made salads have been terrific for me as a way to move off of meat every day, and wanted to encourage you to consider what our kidney doc recommended, which is try to do 3 days of no meat each week as a way to reduce the load that you're putting on your kidneys. And then finally, just to remember, don't go to bed within 4 hours of eating. Ideally, minimum 2 hours. Let the food digest first so that you don't get acid reflux and other acid-related issues. And a fasting process, also very good. Once again, this is Greg for Teslafaninsight. Thanks for joining us. Just au revoir, hitro hoda hafez drashich ni hama. Salam, arrivederci. And in Jamaica, we say enough respect, walk good man. Thanks for joining us. Have a great day.